Today I'm going to share with you the 6 biggest mortgage myths. First off, my name is Saylor and I'm a 26-year licensed mortgage professional. I'm going to be sharing with you things I see on a weekly basis. The truth is there are more than 6, but we can only make this video so long. Okay, myth number 1. The lowest rate is always the best option. It's often not true. It depends on the cost for that rate and how long you expect to have a mortgage on the property. 2 quick scenarios where it may not make sense to take the lowest rate. Somebody thinking they're going to sell the home and move in, let's say, 3 years. We look at how much you pay extra in your monthly payment every month for that higher rate and compare that to the difference in cost between the higher rate and the lower rate. And again, if it's 3 years timeline, we look at the 3 years timeline and see what makes the most sense. Another scenario is when we're in a rate environment, it should be dropping. In other words, if you're likely to refinance in the next, say, 12 to 18 months, why would you pay extra costs for a lower rate now when you're just going to refinance into a lower rate shortly? Myth number 2, you need to put as much down payment as possible and at least 20%. Well, that's not necessarily a bad thing. It's not always the best move. The cost of PMI or mortgage insurance, first of all, is often very low. It makes more sense in some cases also if you've got other debt to pay off high interest, say, credit card debt and put less money down. Also, it's not a bad idea to hold some money back in case you need it for the house or also reserves. I'm a big believer in having about 6 months of bills in reserve if you can do it. And lastly, there are a lot of great loan options for 0 to 5% down. Myth number 3, all pre-approvals are equal. Definitely not true. First of all, you need to make sure it's a true pre-approval, not just a pre-qualification. And the difference of a pre-approval from a local lender is looked at completely different than an online lender, especially the big boys you see advertising on TV, to the listing agent and the sellers. Myth number 4, applying for a mortgage will hurt your credit score. It's like anything else. If you abuse it, sure, but you don't generally get punished for applying for a mortgage. Myth number 5, it's cheaper to rent than buy. Well, when you calculate real estate appreciation, paying down the principal of the loan every month when you make your payments, and tax benefits, you will almost always come out way ahead with buying, even if the actual monthly mortgage payment is higher than the rent payment. Okay, you know what? We've actually ran out of time. So for that 6th and final mortgage myth, reach out to me directly and I'll give you that one. All right, thanks guys. Don't forget to like and subscribe.